We are looking at Anime and Pengu bleeding, and it's a bit scary because they're one of the best brands in the space. Even my own team member is a big bull of Pengu. He didn't sell any of his Pudgies, he didn't sell any of his Pengu, he kept buying more and more and more. But after a point, he was like, how much do I keep buying? So we're going to be announcing a partnership with one Web2 app that has 17 million registered users that's coming under the Redacted ecosystem. If this market was bullish, we would have done probably 100% buck. Having spoken with a bunch of founders, Julio from Pixelmon, Memeland, Mocavers, we got a common response from all of them. I wish I had a lower vesting. It's a legal casino. That's how the current market is. It's not a builder's era right now. It sucks to be a builder.
Sean,
Yes.
my man, you're the founder of PG Group, Redacted Ecosystem, and Jirasan. You are the leader of an NFT community of thousands of holders, 10,000 PFPs on the market, and an ecosystem of products, huge ecosystem under the Redacted ecosystem. Just yesterday, you announced the RDAC token, the Tokenomics. How's the last 24 hours been for you?
I think it's nothing new. I think we have gone through a bunch of stressful periods, being in the space for almost 4 years since the launch. I think I can't say we didn't expect this because at the end of the day, we studied Pengu hard, we studied Anime hard. So we thought we had to do something different. We had to shake out the people that are anyways here for a quick day one dump, right? So how is it going to help a project when there's going to be a bunch of farmers? So I think last 24 hours has been a little too stressful, but I think we came out fine in the end. Our floor is like pretty stable after a bit of dump. And I feel like the people that are holding now are the people that want to be with us for a longer term than just the guys who are looking for a day one dump. So yeah, pretty mixed emotions, but I think overall, lots to learn for us, and we gained a lot of insights on what we could have done a little better, but no regrets as to how we went about with it.
What would you say you could have done a little bit better?
I think maybe an AMA in the Discord before we announced, because I think anyways, those people who support us would have joined the AMA and they would have understood what the whole vision was for why we are doing some drop like this. Because if our aim is to eliminate the day one dumpers or the people that are just trying to be the fastest fingers, then I think the supporters deserve a chance to know and not just freak out by looking at the tokenomics. So I think that's the only thing I think personally that we could have added on. But rest of it, I think, is all coming from gamblers who have lost a lot of money elsewhere and trying to make something from somewhere and just pissed that they can't dump 100% on day one.
Absolutely. So, yeah. But what a strong response you got from your community. When people care, they share. And the whole Jirasan community came out yesterday to speak on the token, with it or against the decisions that were made. Would you say your number one fans, the people that, there's always those 20% of people that make up 80% of conversation and sentiment. How would you describe these people's response to what they saw yesterday?
See, I think it's always there's another way to say the loud ones always dictate the sentiment.
Yes.
Right? I think it was not that bad personally, right? Because I think the people have seen us. Like we have, I'm not sure whether you know this, but PG Genesis hit like a peak of 25 ETH back in the day in 2022. We hit like a 7 ETH floor for the Gen 2s with a 0.05 ETH mint and a 0.1 ETH mint. Our community has gone through a lot. Like, to be honest, I don't know like how to put this, but it's very hard as a community when you go through all these things together for 4 years, ups and downs and ups and downs. One thing that people know is that we are not going to leave the space, number one, and we've always found a way to come back. Like with Jirasan or with anything, our floor has come back, our market cap has grown and whatnot. Every time there's a dip, whether it's a bear or a bull. So I think there were very fair criticisms from the critically thinking, long-term supporting loud ones. There were very few of them who were like shitting on us. And the more we studied, those were the guys who got screwed by the blur bids, right? The blur bid bots. So they keep, bidding like little lesser than the flow for farming and whatnot. And when there's a mass dump, they get screwed. They come into the Discord and they start creating a mess. So we were aware of this. So we were like, we have had this kind of situations before. So we realized that it's not the real ones that's making noise, and it's it's these kind of farmers that came in and stuff. But overall, I think it was a split. Those who looked at Jirasan and PG as a long term, the highest success for us for as a project for a long term, they understood that these kind of things made sense. But for the next set of people, of course, I think anything is not going to satisfy. They themselves do not know what to expect. Like whether 100% would have made them happy, or allocation of tokens, more tokens would have made them happy. They don't know, right? They don't know what to expect. So I think, this is what pretty much happened.
One of the things you were really trying to emphasize throughout your communication in the last 24, 48 hours is that RDAC is not a meme coin. It's an ecosystem coin. When we are to look at the tokenomics, so 10% goes to Jirasan holders with a vesting, so 25 unlock with gamified vesting. What was the thought process of doing this other than having high float on the marketplace, which is less tokens circulating, meaning less sell pressure or volatility on the token?
So it's actually 15% for the Jirasan. Okay. So we tried to keep it a little ambiguous, but the tweet yesterday, the image had something as 10% Jirasan and 5% redacted San, right? That was the thing.
Okay.
So I thought people might understand that San means it's for Jirasan. That means the 5% is also going to them, and it's for some loyal supporters. Like not everyone's a holder. So the 10% is for anybody who has an NFT and stuff. The 5% who we consider as real holders, we wanted to distribute. It could be people that held through this FUD. It could be the top 100 holders. It could be, whatever, right? So we wanted to keep it a little bit of, let's say like a surprise or a suspense thing, right? So that's why we put it as a redacted San, and we hoped that people linked that, oh, wait, it's ending with San. That means it's also coming to us. And also we're not going to be crazy low float on day one. We are looking at not including liquidity. We are looking at 11 to 12% unlock on day one, right? And this includes a suite of products like from Magically Crates, Maxis, platform users, and a bunch of other communities that are going to be receiving these tokens that were under Redacted ecosystem, right? So it is not going to be a low float model, but it didn't make sense for us to unlock too much just for the Jirasan NFTs and make it a PvP, right? I know for a fact not every single Azuki holder can dump their anime on day one or Pengu on day one. It becomes like a PvP. I held my Pengu, I held my anime, I trust in the team, I don't look at the flow. It is what it is, right? If it's 80% down, I take it, right? If it's 100% up, I still take it, right? So this is a bet on the team. So similarly, not everyone can exit. It's going to be a PvP battle, like who's going to claim first and who's going to dump first when we do 100% unlock at TG for the NFTs. It's not going to benefit anyone. And the thing is, the real holders, anyways, they're never going to dump their token. They're going to hold it. So who's it going to benefit? The bots trying to fight against each other to claim first and dump the 100% of tokens first, and it destroys the NFTs. It destroys the tokens. It looks really bad, right? I'd rather have an up-only chart rather than just starting at super high peak and down 99%, right? So this is pretty much like our concept. So our float is not going to be low, but it's going to be distributed across 300, 400,000 wallets. We're bringing in some of the Web2 users. Redacted is going to be the first ever token. So we're going to be announcing a partnership with one Web2 app that has 17 million registered users. That's coming under the Redacted ecosystem. We have equity in them. And when that comes out, those app users are going to come into Redacted ecosystem claiming a $5 to $10 airdrop. It's small, but for Web2 users from Southeast Asia, it's a decent money. And Redacted is going to be the first ever crypto coin, right? And we all know how attached we get to our first ever crypto coin. You see the percentages move up and down and you get excited. Some of them buy more, some of them maybe dump even the $5. So it's not going to be a low float. So it's a minimum 11 to 12% unlock on day one. I also announced yesterday there's going to be a public sale with very reputed launchpad, one of the most reputed ones that all exchanges are completely fine with. I would say the only one that most of the exchanges are fine with. So that's coming up. It's not for holders. We're not asking our holders to put in money. We want to attract the audience from outside our base. So a percentage is going to go to the public sale. It's going to be at 70 million, valuation. So that's going to be one of the things. So this is not going to be a low float model. It's going to be a medium float, but being an ecosystem, you need that. Else, if your token dumps and cracks under 100 million or 200 million FDV, the tokens are worthless. How do we support products, right? So this is pretty much the concept or the plan behind it.
When it comes to the gamified unlock, is it completely randomized, or do people have to do certain things to get their unlocks?
See, having spoken with a bunch of founders, right, like Julio from Pixelmon, Memeland, Mochaverse, and a lot of them, we got a common response from all of them. I wish I had a lower vesting for investors or for NFT holders. Why? Because the problem is there's constant sell pressure coming in every month, right? Especially when you go into a mid-bear market like now, where I can't call it a bear market, but an altcoin bear market like now. How do you get people to buy more, okay, when no one's buying more? And on top of that, you have a sell pressure every month, right? So what happened, what we got from talking to all these people was that don't get stuck into this thing of going with an 18-month, 12-month, 6 months and whatnot. Be ready. If there's a volume surge for whatever reason because of an exchange announcement, like what happened with Mochaverse, unlock a little bit more, right? Have that flexibility, right? You know what events are coming up as a founder. You know what things are coming up, some major announcements, some major product launch where people can use the tokens or whatnot, where there'll be natural demand coming up. You know that. So when we have a gamified vesting, it means we know the moments or periods where there's going to be potentially high volume of purchase. In that period, we can unlock the tokens for people. Okay. You don't have to feel like every month, first of every month, we have to unlock. If there's going to be a crazy bull altcoin market coming up that where everything is going to get eaten up, we don't need to pump to billions of dollars of FDV for one day and then dump. Rather, let the tokens out. The buy pressure is going to automatically, this thing, right? Like it's going to take care of itself, right? Like it's not going to benefit anyone if there's a crazy pump and dump because of an altcoin market, because Mon protocol is now at 50 mil. Maybe in a gaming altcoin market, it's going to pump 10x in a day. We know how things move.
So it's not randomized. It's more calculated.
In a way, right? So,
and do they all unlock, let's say 10,000 NFTs, they unlock together based on...
Yes, certain things.
Together,
so we'd be like, hey guys, check your wallets. Another 1% of tokens been dropped.
Beautiful.
We don't know when. We're not going to announce it's coming in 24 hours, nothing. Okay. So we don't want the floor to pump and this and that. We'd be like, hey guys, check your wallets. People like that unexpected thing, right? So it might be even after 2 days after TG, we might be like, guys, check your wallets.
Will people have to do anything?
No, we're not expecting them to like do some tasks, this and that and whatnot. They're paying money to buy the NFTs. It's not a free NFT. They're buying from the open market. So they already have paying for it. I don't want them to do more and more tasks to do it. They can earn more by doing certain tasks, which is supporting our products, using our products. So if you're using, we're going to be announcing a marketplace, joining our NFT marketplace, joining our ecosystem this week.
Let's go.
Right? It's a very, very solid one. And I want people who support Redacted to go and use that marketplace over OpenSea, for example, right? Because why? It benefits all of us. So maybe you get extra points for doing those kind of things. But other than that, for this randomized thing with the 5%, the vesting part, the 6 to 12 months, don't be surprised if we even do a full unlock in like 2 months. Okay. We'll be like, okay, guys, this is it. Here you go. Everything's out because the market's amazing, right? But within the 6 to 12 months is a period where for them to know that it's not going to take years and years and things will be done in few months. When we believe and we are confident the market is able to absorb the pressure naturally, it makes sense to get it unlocked.
Okay.
Yeah, and it's only for NFT holders, by the way, nobody else. Not the investors, not anybody else. It's only for NFT holders, which are community, which we believe are the community. So the investors are still going to have their 18-month vesting, and that's what they signed up for. But this is only for the NFT holders.
Has it been disclosed when do investor tokens start unlocking?
It has been public because we had, we announced it like even like a year back. The things have been circulating. So there is going to be a 10% unlock for investors and about 3 months cliff following that. So the total is coming to 11 to 12% on day one. But most of these investors are guys like Julio and Spartan and Sandeep. And we picked up Dingalings and, who's also our advisor, and Grail and bunch of those, I would say Chads of the space and people that I've supported, like Revolving Games and whatnot. So our belief, as it's a free market, but my belief is that I've been supporting their projects, and I do not expect them to come in and claim like a small amount and dump on day one and
100%.
stuff, right? So this allows us to show that the investor strength as well, like than a typical traditional, investor model where people mistake that everything is bad because of VCs, right? I beg to differ, right? None of our VCs have ever DM'd us and have been like, hey, when are you launching? That's not how VCs work. You think Spartan cares about a 5K unlock on day one? They don't give a damn about it. For them, it's like moon or bust. And for them, moon is like hitting 100 or a 200x. Like, for example, a Cookie. Cookie is a coin backed by Spartan. The token died for 6 months, right? And now it hit like a 600 million FDV. After 6 months, people thought the coin was dead. Under 20 mil market cap, it went so low. They bet on the team, they bet on the idea. After 7-8 months, the token hit like a 800 mil, 600 or 700 mil FDV when the AI meta kicked on. So you think the VCs on day one, at least the tier 1 and the tier 2 VCs, they do not care about their day one unlock. Like Cookie had an unlock for all of us on day one. I didn't dump. I went and staked the Cookie. It didn't make sense for me to dump at a 30 mil FTV or a 50 mil FTV or 100 mil. So for me, it was like the same thing, right? So for me, it makes sense for me to go and look at it when it's a 20x, 30x, and not necessarily a 2x or 3x, right? So
it's for investors, it's a 10% unlock, and then 3-month cliff, and then it starts vesting for 18 months.
18 months vesting.
18 months of vesting. Okay. One of the things people don't like, and I'm speaking also for myself, is the uncertainty and having to do things.
Yes.
People, they own a couple Jirasans, and then they own all these other hundreds of NFT, and people lose track of things.
Yes.
So the moment an ecosystem starts to become complicated, they're just like, you know what, this is like, I don't have the bandwidth and I don't want to be clicking on my wallets every 30 days to connect and to sign transactions to withdraw. So I'm happy to hear that it's an auto airdrop that people get.
It is going to be an auto airdrop for the vesting. Like, we do not want, that's why we're launching on base as well. So, at least for the NFT part. Investors, they have to come and click. That they have invested, they have to go and claim whatever they have to do. But from an NFT side, it's not, they don't have to do that. However, for claiming the airdrops of other tokens in our ecosystem, they have to still go to our website to click, because they have to decide whether they want to burn their points for like an iAgent token, or whether they want to burn their points for a RampX token or whatnot, right? So that's where the gamified staking part comes into play, because there's no other way to solve that issue unless sometimes maybe we can even do an airdrop. But apart from that, from an NFT holder, just purely collecting redacted, we do not want to have them to go and claim and stuff like that. So we will be airdropping the tokens. So for example, you hold Jirasans, you don't have time, you're doing all these podcasts and a lot of other things. You come back even after 3-4 months, the tokens will be sitting in your wallet, right? Not like, oh, you didn't claim, so it's burnt and things like that. So yeah, that much we can guarantee for that.
Is there a world, and by the way, I completely understand you're building Redacted as a business, it's not a meme coin, but is there a world where a full unlock for the community is good? And the reason I ask this is, let the jeeters jeet and let the collectors collect. With Pengu, for example, I know a lot of people, they got their big Pengu allocation, and then they bought even more.
Yes.
Because even with the allocations that they got, they felt underexposed to the ecosystem. Yeah. So that you get some sell pressure, but you also get buy pressure. When there's a linear or randomized unlock, all of a sudden it's like, I have my tokens, but I have exposure that is coming up.
Yep.
Instead of me buying right now, might as well I wait for my next tokens to unlock. So do you see you potentially losing on community even further, buying into conviction?
So I think, this is a very good question, in fact, right? So we considered and we looked at all these options. If this market was bullish, right, we would have done probably 100% unlock. Right, we are looking at Anime and Pengu bleeding, and it's a bit scary because they're one of the best brands in the space. It's a little scary, right? Like even my own team member is a big Kevin. Kevin is a big bull of Pengu. And he didn't sell any of his pudgies, he didn't sell any of his Pengu. He kept buying more and more and more. But after a point, he was like, "How much do I keep buying? It's going down and down and down. You don't know what's the bottom." It happens, right? So I think ripping the Band-Aid off is a good model in a bull market. Like Pengu went up because there was altcoins. There was a lot of greed in the market at the time, and it was amazing. And I'm sure, like, even I hold my Pengu and I hold my NFT also. But at the same time, I also think that the biggest challenge is to try and maintain, how do I say, the balance, right? Like the balance of how many people are going to hold and how many people are going to dump, and where is going to be the buy pressure coming from, and how much are they going to accumulate and whatnot. So for us, considering all those things, we're not as big as a brand as Pengu, right? We know very well that we're probably not going to get like their amount of buy pressure, right, from the external community or stuff, right? And there's going to be some amount of buy pressure. I know there's a set of people, but when we do 100% unlock, in a way, it's a slap on the NFT purchasers' face who are buying at the highs. The reason why I'm saying this is, what happens is when a guy purchases at like a 1 ETH or a 10 ETH or a 35 ETH or a 20 ETH flow, the problem is not everyone's a Pengu, and not like, for example, like Azuki's NFT flow went to like 11 or 12 or 13 ETH or whatnot. It couldn't sustain that floor, that thing. So where people start feeling like, shit, I could have just waited and bought the token from the market instead of buying the NFT and whatnot. So for us, considering the market situations at this stage, right, that's why we call it the randomized vesting, because by the time we launch the token, if things change, we can always open up, right? It does not stop us from not opening up if the appetite, like if you saw Lingo Coins launched in November, exactly the week where Bitcoin went to 105K. Euphoria was max, greed was 87 in the fear and greed index. Lingo hit a 700 million FDV. Nobody expected that. How many people have expected like Lingo? They had a KuCoin, they had Gate and Mexi, no Binance. They outperformed 99% of the coins, right? Why? Because that week, everyone was bullish on the whole market and they were buying anything and everything. And this week, if you look at the market, nobody wants to touch even Fatcoin. Right? Fatcoin's bleeding to 45, 50, like 500 mil FDV, while it was like, 2.5 bill just like 3 weeks back. So for us, it gives us the sense of comfort that, hey, we can manage the sell pressure. The money we have in our treasury, with the liquidity and what we can provide, we can manage the sell pressure if our unlock is 11 to 12% total on day one, including investors, including NFT holders. If more hold, amazing. We can do much better job even in a bear market. But if we tell that we are going to rip the band-aid off, 100% unlock, we are going to look, we don't know, we can't control the conditions, and I don't want to keep delaying by stating market condition is bad, this is terrible and whatnot. But as much as I can tell you, 100%, market conditions are very important for a token launch. As much as people may accept or deny, like you feel the FOMO to buy the tokens when the market is amazing. You don't feel the FOMO to buy the token. So I posted a tweet yesterday. Our first step is to figure out how to make existing holders not sell, which includes calls with the investors, the main investors, explaining them our vision and be like, hey, can you commit? And we get an answer, yes, of course, and stuff. So we get an idea, and some of them, of course, they be like, hey, maybe I can't commit. All right, fine. So we did an analysis, chatting with most of our investors, like, hey, are you planning to sell? Or are you planning to, stake or dump or whatnot? It's okay. Everything is fine. You don't have to, you can change your mind. Just a survey, right? Just a basic survey. I don't know how many have done it, but for me, it's just an idea. It's nothing wrong. You invested the money. If you want to sell, you can sell. But we got an idea. So we saw what could be the potential sell pressure from the investor side, right? And we estimate NFT holders, maybe 50% or 60% of them to dump.
A full dump.
The 25%, whatever they get unlocked.
Okay.
I mean, we are expecting, right? We always, it's better to be on the worst case scenarios than this thing. So we spoke to a few of our whales and we got them to commit to lockup as well. In the sense like, hey, just let's keep it going, whatever, right? Like it's important to stay friends, right? So we are also continuously chatting with few more of our whales. Like for example, guys like Kevin Hendrickson, he owns 70 Jirasans. Yeah. He's an advisor and part of the team. He's not going to dump a token, right? He's part of us, right? Like he's working with us. So there, that's locked up. And we know like a bunch of those kind of whales, they're all committing to lockup, right? So we know what could be the potential sell pressure on day one, and we know that that's manageable. We won't die as a token, as a brand, at least on the first day. This is very important because if you die as a brand on day one, it's gone, right? It's very hard to win the trust from people. So if we do 100% unlock and I commit to it, and let's say Bitcoin shits to 80K on the day we announce our launch, what can I do? I'm dead. I'm gone. I can't do shit. Like I can't. Like I have to let the token bleed to maybe like a 30 mil FDV, right? I have no other choice. 20%, 30% of circulating supply in the market, and we have to probably buy back and burn, right? It's a very hard job, and when you let it bleed, like you look at right? I think that's what they're doing. Kyung's project, like, you know, I think that's what they're doing. They let it bleed so hard to like a 18 mil FDV. Now they can buy, and they raised $20 million. The market cap is $1.5 million. They can buy the whole token supply out, right? And then they do what? They can hit 30x, 40x or whatever. This kind of things are happening, and not many people talk about this. If people are delusional to think every single buy is from investors and institutions, it's not the truth. The truth is a lot of teams let the token bleed, and they buy back themselves, and then they print charts. This is happening. And many do not want to talk about it because it's sensitive and whatnot. But I know for a fact which projects are doing what and whatnot. So
for you to be able to move the chart, how much of the percentage would you need of the token?
So circulating supply doesn't mean every single token is listed for sale, right? Mostly it is impulsive decisions when people decide to dump when they see the price. It's not like they list. It's not like NFTs where they go and list the token for a sale at like $0.1 per token. Like in NFTs, if you want to sell, you go and list your Pingu at 20 ETH. You'd be like, I wake up, if it hits 20 ETH, great. Not everybody who claims the tokens, they don't know when to exit. They just wake up, they see, oh, Mocha has done a 300%. Let me go claim and let me go dump. This is what usually happens, right? So to move markets, technically, you don't need much. Why? Because not everyone's got it listed. If you look at your exchange listings, to move a MON token by 2%, it's only $10,000. Not many, again, check this, right? In coin market cap, if you check the depth, plus 2%, minus 2%. It's like 10, it's like 5 figures maximum to pump a token by 50%. Because that's how thin the token is, right? Because not many are listing, some people just stake it and they forget it and whatnot. So to move a market, you don't need a lot of circulating supply in hand. Only thing is for it to sustain, right? You hit like 10x. For it to sustain, you need at least like 70-80%, the majority of the circulating supply in hand. Else, you cannot like sustain the chart, right?
And this actually brings me to the question that I wanted to ask you on the podcast with Crypto Gorilla 2 months ago. Shout out to Gorilla. You were talking about market makers and how the deal you had with market makers was on a retainer, not on a token, so that they don't dump, because everyone has to make profit. Can you tell us a little bit about that? How does it usually work?
So I think, again, these are things I think, again, I'm happy if more and more people learn about. So there's two options how market makers work. One is the loan plus call option, where you don't pay them or give them any liquidity, right? You just give them tokens, 1% of the supply or 2% of the supply. They supply the liquidity from their end. Right, they use their USDT to supply. What I mean by supplying liquidity is they put the spreads, the buy and the sell. Like, the buy and the sell spreads will be put out by them. So if that means someone wants to sell at $0.5 and someone wants to buy at $0.5, market makers are the ones who match it. Market makers are not chart printers. Market makers, many people think market makers are chart printers. They are the ones who, make the market. It's a very wrong term. I think the term market maker is itself wrong. Like, it's not market making. It is just providing liquidity for the tokens, providing depth. If someone wants to buy, sell at $0.5, if 100 people want to buy at the same price, if there's not enough sellers, they come and match. If there's not enough buyers, they come and match and they take the spread. That's how they make their fees. So in the loan model, what happens is when you give them the token supply in hand, they can dump the tokens anytime. If it pumps to 500 mil, they dump it. They're taking some chances, of course. They can dump it slowly or they can do whatever they want. And then they can buy back the token at a lower price. And after a year or two, when your loan ends, they return you the tokens. Okay.
Interesting. Okay.
So this is the loan plus call option. So you loan them the tokens. They can do anything with the tokens for the period of time. There's something called as, strike price. Especially if the strike price is hit, they're allowed to sell. They're allowed to. So what happens is, for example, if the token is 100 mil FDV right now, and the strike price is 500 mil, they can pump the token to hit like a 500 mil for even few hours. And then the strike price is hit, they can dump the tokens.
Okay.
And then only after 2 years or the period ends, they have to give you back the tokens. So until then, they can play with the tokens. Whatever you try to do, announce a bullish announcement, token goes up, the market makers can dump, right?
So you took the path of just paying them a retainer?
Retainer is where you pay them a fixed USD plus you supply the liquidity, right? They cannot dump the tokens.
Okay.
They play with your tokens and they supply your tokens and they supply the USD, what you provide them. And they don't have the rights to sell. We'll have full access and we'll have full control to see what's happening. And they provide liquidity. So if someone values at 100 million, us at 100 million FDV or 200 million FDV, if a bunch of people want to buy, all they do is provide liquidity for that, right? So they do not play with your tokens. They cannot dump the tokens. So this is the difference between it. So we are going with a retainer model. Most of the projects that went with loan plus call option is because they raised very less. If you raise $1 million or $2 million and you go to the market, right, and your exchanges, the cost is $300,000, $400,000 per exchange. You pay $500,000, sometimes even $1 million for certain exchanges, like tier 1.5 exchanges. You might even pay like $1 million, right? So where would you get the money to pay the market makers on top of that? And they're forced to sell. Teams are forced to sell their own tokens.
Absolutely.
To build a treasury. So what happens is you have $30 million volume on day one. Team might sell 20%, 30%, and they make like $3 to $5 million on day one. And now they're like, we have money by selling their own tokens. So this is why raising the right amount is important, right? The right team raising the right amount is very important. If not, they have to dump their own tokens to try and make that money, which is not the ideal scenario for everybody. So for us, we have more than $10 million in our treasury already. We have a public sale coming up, raising about $3 million on top. The whole thing is going to go for liquidity. So we'll have a treasury for growth. The
public sale is for the RDAC token as well?
Yes, it is for the RDAC token, right? So it is with a very, very reputed one. I think the news will be coming out probably this week or next week maximum. This is mainly targeting like more than 10 million plus users outside of our bubble. Yeah. So they know that the first step is for people to know that, there's a token called Redacted, right? And this is in the crypto space. So we are not encouraging our holders to go and put money or whatnot. We are giving them free tokens. And this is at 70 mil FDV. No, it's not like a cheap, access or whatnot. If they want to double down, they can. But keep in mind, all the launch pads, you get like $100 to $200 ish tickets. Right? It's not like it's crazy. It's not like you can put like 50K or 100K. That is the thing about public launch, but it's not like you can go and be like, hey, I want to invest 10K. The best way for them is to buy NFTs. The NFTs unlocks will be a lot better. But for those that don't want to buy NFTs and they want to go with small amounts, $100, $200, $500 kind of a thing, launchpads usually help. Very important which launchpads you go with. CD5 is amazing for the gaming side of things. They have a gaming community.
Shout out to Meta.
Shout out to Meta. Very, very this thing. So certain launchpads are amazing for certain sets of projects. For us, we believe the launchpad that we have chosen, so much of due diligence and everything, it's the best for us. And
it's not live yet.
It's not live yet. I can't announce it yet, but It's going to come out. Very, very, very solid team. And I think people will be happy when they know who's also backing us and supporting us. That's one thing that's coming up. That's going to bring in. And we're also not yet started our marketing push. It's going to be a 2-week sprint. We're working with a bunch of teams, from the Web 2 side, Web 3 side, to push the marketing towards the Telegram groups and Twitter groups and whatnot. Because the first and foremost thing is exposure. Whether the token does well or not, or whether people buy or not is secondary, but people need to know that this token is coming out. Like everybody in the space, I think knew Pengu was coming out. Whether they bought or not is secondary, but knowing that Pengu is coming out is very important. And that is our goal. First step is to make sure the majority of the space knows that the coin called RDAC is coming. Whether they buy it or not is secondary. This will be outside the current crypto bubble. We are in Kaito. We haven't even applied. We are in Kaito pre-TG thing. We were in top 8. Last week. Now we are in like top 15 or something like that around that mark. And this is happening in a side of the space that not many people are aware of within the NFT bubble. Because people are like, Shan, RDAC does not have enough exposure. And I'm like, there's a separate set of group. Like there's probably like in 500 Telegram groups, RDAC information is being spread around through a different set of KOL and marketing. That's we are completely in different bubbles. Like NFT bubble is here and the crypto bubble is very separate, and they're all in like different sets of groups. So RDAC as a token launching, the info has to spread around, and that's going through few of the agencies we are working with, few of the KOLs we are working with and stuff. So I don't know if they all will buy, but I know at least they know that, there's a coin called Redacted launch. That is our first goal.
Before talking about the marketing, what was the thought process with going with base? The reason I ask, and when you said base, I was like, interesting. During a recent conversation with Luca, he mentioned that a big reason why Pengu took a huge hit with Trump and Melania
Yes.
is because they were the biggest free on-chain money
Yes.
that ever happened in crypto. And the holders, a lot of them, when they saw Trump and they saw it, they missed it. They saw Melania come out, they were like, I'm not missing
They
that one.
sold everything and moved.
So, Solana, so great because you can swap in seconds.
Yes.
So that's great for holders, but oftentimes it's not so good for token ecosystems. All swapped.
Yes.
Everyone, free money, we just swap to Melania, let's not miss this one. And that's what Solana does. It's a fast-moving industry. Was Base a choice based on the ecosystem, the technology, and how it fits Redacted, or was that more of a preventative protection measure from perhaps the degen crowd that does not really fit the buyer persona of Redacted?
See, I'm a big bull of ETH. I know it's been because I don't think people fully understand why we came into blockchain first. We came to blockchain for having a fully decentralized system, right? And I truly believe that ETH is the leader. Solana is doing an amazing job, but I don't believe in a system where the team can shut down the system any minute, right? I know it's going to be controversial, this particular part. It's personal beliefs, right? It's not like I don't have Solana as an investor. Yes, majority of my funds are still in ETH. I'm still a big believer. There's a reason why people call it manipulation, whatever it can be, but there's a reason why BlackRock is accumulating a bunch of ETH. There's a reason why a lot of things still happen in ETH. The amount of TVL that's locked in ETH is also high. But unfortunately, ETH's gas fees and all those limitations is bad, right? So what's the best L2 that we can think of where our products are based on ERC20? Most of our products are based on like EVM chains, right? So for us to reward people with tokens, airdrops, etc., for our products, upcoming products, and as you mentioned, you don't have the time, but you want to see something in your wallet. Like, sometimes when I log into my base wallet, I see, I've got Agent Yellow Panther airdrop. I got Agent Jeff airdrop, few $100s, few $1,000s. It's just sitting in my wallet, right? This is what is possible with something like Base, which is what exactly Solana, the cheap gas fees and whatnot. But for our products where we are bullish on EVM and we believe that most of our products are going to be EVM focused, even non-abstract. We're launching products on abstract and whatnot. Having the EVM access is the best way for us to drop tokens, drop some surprises, drop soul-bound tokens or anything, right? So what is the best chain that we can think of that's got the best tech? Potential base coin drop maybe for people that are participating in it. And I think the kind of crowd that's there in base is not the meme coin crowd. They are focused a little bit more on tech, right? Yes. Pengu is a culture coin, perfect fit, I feel like, right? Arbitrum, I think for gaming and stuff, I think excellent, right? I think iAgent is dropping on Arbitrum from last I spoke with Jamie. Because it's a gaming, I told him like, hey, AI meta base and stuff. He's like, no, we are more of gaming. We are AI, but we are also gaming. So I think Arbitrum makes sense. Arbitrum tweeted about iAgent 4 days or 5 days back as well, right? So I think for us, we believe that like base is going to be like a premier layer 2 with a lot more things coming up, potential application for Coinbases or anything. Like I personally believe in this. I don't think Brian is just launching a L2, having one of the biggest exchanges in the world and launching L2 and be like, hey, we're not going to do anything. We're not going to support builders, right? If we can get to be like one of the best products or best launches on base, I strongly believe the support will be even more in the next 6 months or 1 year or whatnot. And I'm sure there's going to be a pathway towards something better. So that is the reason for us to choose base, gas, tech, and the crowd. The crowd in base is not meme coinish. In Solana, I feel like a token like ours, as you mentioned, tomorrow they see a fart coin or the butt plug coin, they're going to dump us instantly to buy it. They get wrecked and they lose everything.
I 100% see the argument. I mean, we're in the age of crypto where the fundamental tech is commoditized.
I know.
Every chain is fast, cheap, efficient, secure. What makes AVAX versus ARB versus Solana versus ETH is just the culture.
Yes.
The type of buyer 100%. Persona.
Yep.
The people that are window shopping. They're looking for different things. And there's a reason why most AI agents are on base because it's that audience that is a little bit, perhaps you could say, sophisticated.
Yep.
I don't know how that's going to be taken by the public. Last question I have for you is in regards to marketing, but mainly communication. RDAC, great. Thousands of people are going to become holders of RDAC. What does that mean for them? What do they have to do once they get the tokens? Do they have to start staking? Do they just hold, keep it in their NFT? Does it get transferred with the NFT? So let's say someone sells their Jirasan. Does the airdrop come with the wallet or with the NFT itself? What can people expect from the token once it's out?
Yes. I think the kind of mindset currently in the market is like, oh shit, I missed Trump. Especially after Trump, what we've been noticing is that shit, man, I missed Gen Wealth, right? Like a lot of them have missed the Trump drop and they missed the Gen Wealth, kind of a thing. And they are hunting for the next 50, 100x. Like even if they get burnt 100 times, they want to wait. That's why they're following Kanye West to be like, oh, when is it dropping? And today as well, there was a couple of tokens, big balls or something like that, went to 100 mil. It's crazy. It's ridiculous. Like, it's going to 100 mil market cap, right? Instantly. It's a casino it's a legal casino. That's how the current market is. It's not a builder's era right now. It sucks to be a builder, to be very honest with you, right? It just feels like you're outcast and you're trying to do something now in the space. You're just like, everyone just wants like, hey, Shan, just CTO token will support you. I'm sure if I'm going to launch a coin and CTO it now, I can guarantee it's probably going to do 10x better than RDAC. Because the word will spread and everyone's like, oh, let's throw one sol. Maybe what happens. I can vouch, right? Because there was a fake Jira CTO thing. I just joked about it.
I remember that, yeah.
It hit like $4 million in 2 minutes. 4 million market cap in 2 minutes, and I had like 50% of the supply in hand. Somebody had sent it to my wallet. Yeah. Right? And it's crazy, man. It's crazy how the thing is, right? But like, I can't believe at the same time that something like Pixelmon is under 20 mil market cap. Like, they have $100 million treasury or something at the very least that I know of. Anyways, it is what it is, right? So for us, I think the believers, for RDAC and the speculators, the best is they stake if they believe in the products. RDAC is a bet on a team that is going to bring in products targeting different sectors. Right? Like sectors, like the meta keeps changing. Why RDAC needs to exist? Let me tell you this, right? The sector keeps changing, right? The sector changes from AI to gaming to this to that to whatnot. So for us, if we are going to choose one sector like gaming or whatnot, we are limited. Gaming might not be the main reason why people are going to be onboarded to blockchain. Maybe it's not DeFi, maybe it's whatever, right? So for us, we believe in sector bets, and we don't necessarily believe that we choose one path and then we make it work. It works, it's great. If it doesn't work, what you fail. So for us, we are taking different sectors. So we take equities and rev shares in all these products. Okay, all the products under Redacted ecosystem means we have equity in them, we have skin in the game, we have revenue share with them, and token drops from them, right? So for us, RDAC is two things. The revenue from all these products going towards one channelized entity, that's RDAC, right? Revenue from FlashX, revenue from, BitTap, revenue from iAgent. Whatever is our share, it's going towards one single token. That's number one.
In terms of buying and burning the tokens?
It's burning, pretty much, like what Hyperliquid does, right? Like when the revenue is set, automatically buy back burn. So pretty much what Hyperliquid is doing. We are a big fan of what Hyperliquid and Jupiter are doing, because that's what is build a sustainable business, have revenue, and have token use case for the tokens. No better utility for a token than, having the supply and demand in check. And if you don't have revenue, I don't see many NFT projects right now having revenue other than NFT mints.
Yes.
Right? So having a good revenue is very important, even if it is 5 figures. If you have a 5-figure revenue, people like yourself, you're helping businesses scale. How you can help people with a business with 5-figure profit a month turn to 6, or 6 to 7, and 7 to 8. That is skill issue, and that can be sorted.
Yeah.
But not even having a product where people, even if they want to spend the token, right? I want to spend XYZ token. Where do I spend? Oh shit, I don't have anywhere to spend. We want to solve that, right? Redacted, there'll be 10 to 12 different places you can spend your token on. right? Across the products, fees for the platform, be a creator in Maxis, iAgent, and whatnot. You could use the tokens across even for BipTap and whatnot for discounts, cashbacks, whatever, right? Use first of all giving people a choice to use the token across various products for RampX and FlashX, fee discounts and fee rebates and whatnot is important, right? That's number one. Number two is you stake the token. If you don't want to use it, you stake the token. You're going to be earning points. These points are going to get converted towards the token drops from all our ecosystem products, right? So if you believe that we're going to hit like 2, unicorns within Redacted ecosystem out of like 30, 40 products that we bring in, amazing. One of the products that we have a stake in is Bullix. I think a lot of them know.
Got it.
I'm not going to go too much into it, but even if somebody has like 1% stake in Bullix, right now the value is $10 million. It's $1 billion company.
That's crazy.
Right?
Yeah.
So we have a stake in them. And that means that is one product. And we have stake in BipTap. That is what partnership with OnlyFans South America, right? So we got them on. RampX brought in some of the biggest investors and is kind of like competing with the likes of AI Wayfinder. They literally posted a teaser last week on how you can use AI to just swap your coin, like just by command, just by speaking to it. Hey, swap my Pengu to Fatcoin. It executes it for you, right? So Redacted is a bet on multi-sectors. So our main motto is that irrespective of the chain, right? We could have been a layer, but we don't want to force products to come to our chain because there's too many chains. Rather, we work with chains. We work with Abstract, we work with AWAX, or we work with Arbitrum or whatnot to bring in the users to those products. So irrespective of what the chain is, we support a series of products, series of sectors. Whichever sector is going to be the star for that season, we generate revenue no matter what, right? That's the premier goal. So the token goes along with NFTs. So if someone's selling the NFT, of course the token goes along with them. And from a use case perspective, people could use Redacted in any of our products, or people can stake, earn points, burn it for participation in seed deals of these products, investing in those products. I mean, through KYC, of course, for investments, you need to be KYC'd. So if you have these points, you can participate after KYCing, or you can just claim free drops across these products.
Is there a certain percentage is it, for example, consistent across the ecosystems where X percentage of profit or revenue goes into buying?
We are looking at a minimum 10% from all the products. The standard that we are setting is from all these products, a minimum of 10% is for RDAC.
Profit or revenue? Profit.
Yes. So a minimum of 10%, right? So the main thing that we incubate when we incubate products is to make sure that the revenue and the profit margin is not too small.
Yeah, of course.
That is the most important. We can have a $10 million revenue and just have like 100K profits. That's the kind of products we don't want to touch. We want to intake. So our math is how can we hit like $1 million in revenue and a 900K in profit, so that a 10 to 25 to 50% is ours. So whatever deal that we have with the project. So there'll be more transparency on this as we move along this year with the whole system of if somebody wants to come on board, it will be public as to how much of equity or rev share you have to give it to us, the range, and then we negotiate based on what is needed, right? Like what does the project need the most and what do they already have? And based on that, so for example, like people offer me a lot of advisory tokens. I'm channelizing all that into Redacted now. Say, I don't want the tokens, give it to Redacted stakers, right? So we want to channelize all these tokens, revolving games, and bunch of those tokens that we are getting. Mintify, we announced Mintify token for our holders. Everything is going to be channelized into Redacted staking.
I mean, just from a business perspective, you're giving away 10% of all profit. Some businesses operate on a 10% profit margin. So from a business model perspective, like how does this make sense?
See, why does a team have 10% supply of the tokens in their hand, right? Like Hyperliquid or us, we have 10% of our tokens in hand. Of course, there's 12-month cliff. We raised money to build and acquire user base. We are not in the stage where we can take revenue and sit and be like, hey, this is our profits to run the business. Right? We raised money for that purpose to run the business, correct? So as long as we are cash flow positive and we can pay all the bills and all the profit goes towards pushing the business forward, the tokens are going to do well. We have 10% of the tokens. That's the benefit for the team after 12 months or a period of 36 months. That is where the real value. So people see this team token percentage and they're like, they don't see the in-depth in recent, because a lot of the teams, right, they give up. They give up on the first month, 2 months, they made their money. They're like, I don't want to work for my 10% of the tokens. So from a business standpoint for us, we are a very lean team. And for us, what is the goal? Number one is to have quality products come in. Number two is to make all these products first cash flow positive and run by themselves, right? Number three, the profits or whatever revenue is automatically used to burn through a smart contract basis, the tokens and whatnot. Automatically, our token value that we have, our vested interest in the company with a 10% supply is to make the $10 billion, right? That's when we be like, okay, now this 10% is valuable. And then when the time comes, like you see Wahoo ETH, like Vitalik is sitting and he can chill and he can use ETH for whatever he wants, never run out of money. And that is the real deal. So many of them are forgetting that as a business, it's not about taking profits now. It's about taking maybe 100K now, or do you want to try and make a $10 million in 2 years or $1 billion in 5 years, right? So for us, our value is with our team tokens. We are taking a decent chunk of 12% of the team tokens, and that is a 12-month cliff and 36-month vesting. It is in the best interest. We do everything best to have the tokens high, because keep in mind, Leon, you know this very well. A revenue can be 1 million. But the token value can be 100x of that. That's how the space is. That's how the space valuates. Like Tesla's revenue, P by E ratio, right? Tesla's revenue to Tesla's stock is not equal. It's not matching. The balance sheet of a company does not match like Hyperliquid. They're making $2 million a day, but they're sitting at what, 24 billion FDV? What is the P by E ratio there? So, as in like you know the thing well. But so the point is, if you put all your revenue into making the token a success, your value of the tokens will be phenomenal, right? It'll be multiples.
Absolutely.
So this is the thing I think a lot of teams are missing, and they're not thinking long term with, hey, if we put the money into our tokens and our development of the products, the value will be astronomical. Because no one's going to check, hey, these guys have 10 million revenue, the company should only be worth 100 million. The bar is so low now that a 10 million revenue is a $1 billion company.
Yeah, fundamentals in Web3.
Exactly. So that is how the why our revenue, whatever is our share going towards the token burn is the best interest for everybody.
Oh man, John, good luck on the upcoming token launch.
Yep. Thanks, Leon. It was amazing.
It was a pleasure.
Same here.